Yo, what's good, people? It's currently 7:49 p.m. UK time, Sunday, the 25th of December, 2022. Welcome to the first ever, technically speaking, by myself, Fadlan, aka NinjaTea, and Zeshan Haroon, who is our head of live events, shareholder in Blockchain Sensei, and heads up mergers and acquisitions, amongst other cool things. Then we've got one of our researchers and also partners, actually my original partner in crime when it came to investing in crypto for the first time. Big ups OneCoin, the scam. Back in 2015, St. Jerome. So, you know how we do? You know how we do? Grinding on the 25th, it's all the same to us. So, disclaimer. All our content is for education, information, and entertainment purposes only. No information should be considered investment advice or a financial recommendation to buy, sell any assets, nor place any trades. Please always do your own research. It is very important to do your own analysis before doing any or making any investments based on your own individual circumstances. Always take independent professional advice from a professional advisor or independently research and verify all and any information you may find in our content. Do you wish to rely upon, whether you wish to make an investment decision or otherwise. All investments do come with, what do they come with, boys?
Risk. They come with risk.
Yes, sir. Therefore, you must always do your own
analysis.
Research. What are we not, boys?
What are we not, Jerome? I don't know.
Financial advisors.
Yes, financial advisors.
Exactly. And we do not intend to be perceived or received as financial advisors. However, we are working in collaboration with several accredited advisors. If you're unable to mitigate your risk, please contact us immediately so we can refer you to an accredited financial advisor. So, the first thing we do at Blockchain Sensei is that we like to have a look at the VT. Yes. So the VT, Vanguard, if you don't know, they're one of the biggest asset management companies in the world. And, well, the second biggest asset management company in the world. And this is a representative of the entire stock market. So let's have a look at what's going on. So, as you see here, in around the 8th to the 10th of November 2022, there was a gap in the market. And what happens to gaps? They usually get filled. So when I saw this gap, obviously I wasn't doing technically speaking, we can predict that the market was going to fall back to this range, to this $85 trillion-ish stock market valuation. It did rise up to over 90. So there was a $5 trillion injection in the stock market, but now we're back to these levels. Where is the stock market right now? So if you look at it on the daily, we have an RSI of 44. So as many of you guys know, RSI is an indicator which helps identify if an asset is undervalued or overvalued. Back in October was a great time to get into the VT. So was kind of like early September. Right now we're floating around 44. Where do we think we can go from here? My prediction would be, with the current state of the world, and this is not financial advice, I can be wrong. Shout out to Mr. Harding, shout out to Mr. Spectacular, far greater than I am at TA. But I believe that maybe not in the immediate few days, but I can see the stock market, in my opinion, drawing down further back to these levels and these levels. So me personally, I'm actually not buying any stocks. I did catch some stocks here, but I'm waiting personally for the stock market to dip a little further. Next, let's have a look at the SPX. This is the American market. Let's delete some of this so we're not too confused. What was I doing here with the circles? I don't know. It was a while ago. So let's actually compare. Let's compare something. Let's compare the recent bottom of the VT to the current price. So we can see a 10% bounce up. And let's compare this to the recent bottom of S&P 500 on the current price. We can see a 7% bounce up. So me personally, what I like to see, as I'm very heavily invested in the American market, again, you got to, with technical analysis, looking at the markets, you got to compare it to your own situation, right? So I am heavily into US tech stocks. So what I like to look for personally is that I like to look for the American economy outperforming the global economy. As we can see in recent times, I mean, it's not a lot of history. It's only the 14th of October to present day. But again, we can see that the global market from recent all-time low to current price has bounced up a little bit more than the American market. Less than 8% versus 10%. Okay, so where are we right now? In the S&P 500, well, here is pre-COVID times. So we are right now. Oh, let me copy this one. See, what I predict is going to happen is that I'm calling the S&P 500 to touch. I see no macro reason. I see no macro reason why we don't get back to here. And this price here is not so far from the COVID price. So I do see personally the American stock market going back to pre-corona prices, which is 3,411 before I personally touch the S&P 500. If it does reach pre-corona prices, it would only need to drop less than 10% from current price. So with the current markets, that's what I expect. The FTSE, I own the only UK stocks that I own or have owned in the past are from free referrals from Trading 212 and Free Trade. I've never purchased a UK stock in my life. And as we can see, the current state of the FTSE is still lower than pre-coronavirus times, which explains why the pound sterling is, my language, going to shit. So no changes in the FTSE. Okay, so the VIX, that's just the volatility of the S&P 500. You know what? Let's get this chart. DXY, as you can see, since February 2022, so rewind 10 months, the dollar has been in a insane bull run, whilst the markets have tanked. And since the all-time high, which was around the 27th of September, we've seen a drawdown. So it shot up by a massive 20% from February in strength. And since late September-ish, we've taken a 10% drawdown. That sounds about right in terms of correction. I do think the dollar is going to hit these 2016, 2020 levels. And I think from around here, we're going to see a bit of stability. I don't foresee the dollar crashing back to these kind of February 2022 levels, because the dollar is still the world reserve currency. Then we've got the Dow Jones, which is, your kind of American staple stocks. Let's just compare this with. Am I tripping? Where's the compare button? Oh, here we are. SPX, amazing. So, SPX. So you can see that the Dow Jones pretty much follows the S&P 500. So nothing too crazy there. Everything just seems to be pretty much in line performance with the S&P 500. The Nasdaq, we've taken a massive beating. We're taking a massive beating. So Nasdaq top 100 US tech. We've seen a 36% drawdown. Let's compare that to the global stock market to current price, 21%, much less bloody. And the S&P 500, I believe, a little bit less bloody than the tech market, yet 22%. Now, let me call my predictions. So as we can see here, the recent all-time low of the S&P 500 is very close to the pre-coronavirus high. So I think it can get back there. The previous low of the Nasdaq, which is here, compared to also the pre-coronavirus, pre-lockdown price, I think that we're going to continue to dump. And in my opinion, before I start loading on any more Nasdaq, I'm going to wait for this key price here before I start averaging down, which is 9752. But do your own research, obviously, because there is a possibility that if you follow exactly what I'm saying, that the Nasdaq will never reach this price, and you'll just not get the Nasdaq for that price. It's just my opinion. Let's have a look at gold. So, said it before and I say it again. The only people that win in gold these days, or as of the past 10 years plus, are jewelers and gold day traders, because the current price of gold is lower than it was. Oh, actually, let me just zoom out in the super macro. This is not the macro I wanted to show you. So this macro, yeah, the current price of gold today is lower than it was in 2011. So yeah, what can I say about gold? I don't own any gold. I don't buy gold. Where is gold going? So gold is supposed to be a safe haven to store wealth.
It's not really been performing.
It's not really been performing. And I also believe that within this decade and the next, the consensus for the whole asset class of gold is gonna start depreciating, because it really doesn't serve that much value.
It'll be diverting to more so digital assets.
100%. In our opinion. So I don't trade gold. I won't be touching gold. But it's good to look at where money is, because remember, guys, there is, in fact, let me come on the camera to say this. There is always a bull market somewhere. So remember, in this game of finances, because it's basically the whales playing games, money is either stored in money or put in assets, or taken out of asset X and put in asset Y. So one of the bull markets that few people are talking about in this world is the bull market of sportswear and sports merch. Sportswear and sports merch, I tweeted this on Blockchain Sensei Instagram. Last year, in 2021, was a $78 billion industry. Now it's nearly a $400 billion industry. So sportswear and merch, largely because of the World Cup, mind you, is in a bull market. And so I believe Rolex watches as well. or don't quote me on that. I'm not a watch person. You got a Rolex, right? Has your Rolex gone up since you bought it earlier this year?
I don't have a Rolex if you're talking to me.
You don't have a Rolex? I thought you had a Rolex.
No, it must have been my friends that you saw.
Ah, okay, fair enough, fair
Yeah.
enough. So let's have a look at oil. Let's have a look at oil. So oil broke the 0.5 golden zone. And then we hit 0.23, and now we're taking a retracement, which sounds about right. We peaked the all-time high of gold, sorry, not gold, oil, my bad, was 2008. Where do I'm not the most qualified to talk about this, to be honest. In the macro sense, like super macro, obviously, like oil is a running out commodity. I believe it's going to run out on planet Earth by 2070, they say. So
There is one thing to note. Back when I was living in Scotland, there was a city called Aberdeen, and right
yes,
next to Aberdeen, there's a big offshore oil rigs of BP and Shell, and whenever oil goes up in price, normally the property prices also go up in price. In respect to the same amount.
When the oil prices go up, property goes up.
In Aberdeen, yeah.
In Aberdeen, okay.
That's only in Aberdeen. That's the only place where I know where property prices are coinciding with oil prices.
But when oil prices go down, the houses in Aberdeen go down.
Yeah, yeah.
Oh, that's crazy.
Mm-hmm.
Okay, good to know. Good to know. Because Aberdeen. Right. So I did, however, come across an interesting article on Forbes, why energy stocks are moving up after the most recent slump. So this article was literally today, this morning. So last week, oil prices were down as American price caps on Russian oil were weaker than originally intended. In theory, this meant a more steady supply of oil and lower likelihood of price spikes. This week, a confluence of factors, including the closure of the Keystone Pipeline and an expected increase in economic activity in China, pushed stock prices back on an upward trend. Energy stock prices are almost always dependent. So get this, fundamental. Energy stock prices are almost always dependent on oil prices, which are highly variable. It's not unusual to see such swings. So let's just test this. So we have the three stocks they were talking about. Okay, so if we just compare this to oil. Now we want the what do we want? Oil underscore crude. Oh wow.
Yeah.
Okay. Hey guys, I learned something new. Then let's have a look at Shell. Oh God.
I don't think. Oh, this is Shell versus oil crude.
Yeah.
So, oh no, it's changed now.
Yeah, and now it's Halliburton Company. Well, there you go. There's something new. I'll be honest, guys. I learned that today. Okay, cool. So, now let's get on the crypto market. Oh, did I close this? Okay, chill. So, let's have a look at the crypto market. We're down in the dumpsters. It's okay. We'll bounce back. Okay, so according to CoinMarketCap.com, crypto is an $806 billion market. According to CoinGecko, which is very bullish, it's an $840 billion market. But according to TradingView, it's a $766 billion market. So between TradingView, CoinMarketCap, and CoinGecko, we have $70 billion hiding somewhere. But anyway, all information
unless Sam's taken a bit of that.
in case Sam's taken a bit of that. But let's see where we're at. Let's see where we're at. Let's get another indicator then. Let's do a 200-day moving average. Okay, what can we see? What can we see?
So the pink one is the 200. Yeah, that one.
The pink one is the
top.
200-day.
Yeah, that's the 200, the top one.
Yeah. So we're at 200. So we're very, very bearish right now. If we look in the 2021 bull run, so let's go back to the happy days. The happy days were 2020. We can see that the market way outperformed the 200-day moving average. We can say it even when the market dipped, it only just about hit the 200-day moving average and then way outperformed it. And then as of kind of August 2022, that's when we started underperforming under the 200-day moving average. We can also see that with the respective 50 and 100-day moving averages, we're now performing. Actually, no, we're below the 200, but we're still kind of touching. There's still touch points on the 100. Now, depending on where, there's two big things in crypto right now that are going to basically determine if this market stabilizes and bottoms out, or if the market takes a dump. In my opinion, I'll let Zeshan and or Saint Jerome interject if they wish. Is crypto.com gonna fall /freeze or go through investigation, and or is Binance gonna fall and or go through investigation? Those are the two biggest factors, in my opinion, now, which are gonna influence market direction. I don't think another interest rate hike is gonna crash the market really that much. I don't see Coinbase, anything can happen, but I don't see anything happening to Coinbase, in my opinion. I could be wrong. I think the two biggest things that are going to determine whether this market keeps dropping by a little bit or takes a massive dump is those two macro factors. Zeshan, have you any additional insights with regards to that? Because we've been playing around this. We've been playing around this like under 1 trillion zone for a minute now.
With regards to the creditors that are owed money by Sam Bankman-Fried, they've got like 400 to 500 million pounds worth of I think it's Robinhood shares.
Yeah.
So that also has an impact whether how much each of those get, if any, or if all of their money back, and how it affects, because it's going to have a knock-on effect once that is settled, for how those companies deal financially in their financial books, like we saw earlier on this year with the Celsius and Galaxy, and then that affecting FTX. So we still have quite a bit of time for the knock-on effects to actually come into existence and then affect the markets, as you were saying.
Mm-hmm.
Which is what my interpretation is.
Okay, I appreciate that. Okay, but yeah, this is the article that Decrypt posted 2 days ago. So basically, in a court filing, FTX argued that because there are so many creditors seeking ownership over these shares, the assets should be frozen until this court can resolve the issue in a manner that is fair to all creditors of debtors. The 56 million shares in Robinhood Class A common stock are currently held in a brokerage account in New York City called ED&F Man Capital Markets, including Sam Bankman-Fried purchased these shares in May this year via a special purpose holding company organized in Antigua and Barbuda called Emergent Fidelity Technologies. The founder of FTX and its former CEO is one of the creditors hoping to get hold of the stockpile to pay for his extensive legal fees. BlockFi. Wait, wasn't Sam Bankman's free bail like 250 mil?
$250 million.
Yeah. So I mean that's only 450 mil. So
yeah.
shit. Anyway, if you guys are feeling bad, I thought this was a cool article. The planet's billionaires are nearly 2 trillion poorer this year. So look at the correlation, guys. Crypto used to be a nearly $3 trillion market. Now it's a market that's around 0.8. So as crypto's lost about 2 trillion of value, so have the planet's billionaires. So it's been a tough year for tech billionaires. It's been a bad year to be a billionaire, and not just for those who blew up their businesses or got themselves arrested. Adding trillions to their collective fortunes in 2020 and 2021, the world's richest people were rocked by a 12 months of shaky stock markets, war in Europe, and rampant inflation. As a group, the planet's billionaires have lost 1.9 trillion in 2020, according to Forbes. Estimates with their collective wealth dropping from 13.8 trillion to 11.9. If you're having a bad day, no one has been hit harder than the world's 300 or so tech billionaires who have collectively lost more than 1 trillion in 2022. Companies are slashing costs, laying off workers, and pulling IPOs. Shares of Amazon have created nearly by 50%. Let's just quickly check that. Amazon stock right now is on a bit of a discount. Can we go further? Let's have a look. So, damn, Amazon's down bad. Holy fuck. I've not checked the stock in a minute. So this is Amazon pre-coronavirus. Amazon is cheaper than pre-coronavirus. Amazon is currently at... Oh, wow. Okay. My theory is playing out. So this here is the March 2020 dip. Okay, let it be on record. Are you ready? So this here is the coronavirus dip.
Wow.
Amazon has hit the coronavirus dip, which is why I believe the VT is going to hit the coronavirus. Oh, actually, no. That's too much. The coronavirus dip. I don't want to be that bearish. I don't want to be that bearish. No. Okay. You know what? If Amazon can hit the coronavirus dip, then I think the S&P 500 can hit the pre-coronavirus dip, which is here. I don't want to be saying S&P 500 is a coronavirus dip. That's there. We've not traveled far enough, but Amazon is literally at the coronavirus dip. The S&P 500 have not even hit the pre-coronavirus dip. They're around here. So depending on macro conditions. But anyway. So Amazon stock is down, is it 50%? According to the article. And let's just check the technical analysis. Make sure they're not lying. Yeah, 55%. But let me show you guys some history, actually, because I know this for a fact. Amazon stock during the 2002, not 2002, like 2000-ish. Let me just find the exact place. Like basically during the, look at this. Look at this crash. From the 1999 peak of Amazon to the bloody 2001 dip, that was a 94% dip. And people are complaining Bitcoin's down. But get this, right? Like, this is why in the long term you should get the dip. If anyone who, it's going to be hard to snipe this, anyone who held on to the 1999 all-time high, saw their Amazon stock, that's not close enough, saw their Amazon stock Oh, it's going to be real hard to get this. I have to do approximate. Yeah, anyone who bought... Nah, I need to get closer. I need to get closer. I need to go like here. One more time. Anyone who bought the Amazon high in the year 2000, even at the current price, is 15x up from 15 years ago. Anyone who bought the Amazon high and of 2000 of the 2000s and held up until the November 2021 high is 31% up. But if you bought the 2000 dip, now this is where it really gets crazy. If you bought this, it's so hard to get the exact. I'm gonna have to just kind of guess. If you bought around the 2000 dip and then sold at the 2021 high, you would have had a
38,000.
That's a 300 and no, let me just do this in my head.
38697.
Yeah, that's basically nearly 400x. Like nearly 400x. Yeah, that's 7x. That's about something like 486x, something like that. Anyway, power of long term. So back on what's going on here. So rough year for the rich. United States total billionaire wealth 4.5 trillion. They're down 660 billion. China 1.7 trillion. The total billionaire wealth, they're down 620 billion. Followed by Russia, Germany, and Hong Kong. Also, in other news, crypto is down bad, but VCs keep pouring money in. So after the collapse of FTX, Web3 VCs say they believe in decentralized tech as much as ever. What else can they say? Without even diving deep into this article, in the first half of 2022, there was more money invested in Web3 blockchain companies than there was in the whole of 2021. So the markets are down because the money's not in the coins, the money's in the innovation in the back end. Which, if any Web3 companies are watching this, please contact Blockchain Sensei to see if we can help you get investment. We have relations with over 40 VCs. Yeah, let's get reading this. Two last things from me, and then Zeshan's going to go over the Forex markets. So, interestingly, the judge in the Sam Bankman-Fried case recuses herself over husband's firm past work for FTX. Now, this is a little bit sus, because why was this person even appointed as the judge in the first place? Sus. The judge assigned to oversee the blockbuster, that's a big job, the blockbuster criminal trial of Sam Bankman-Fried. It is seriously a blockbuster criminal trial, and I hope they make a film out of it. Recused herself from the case late Friday, citing a potential conflict of interest stemming from the fact that her husband's law firm previously advised FTX. Well, that doesn't sound like a potential conflict of interest. That sounds like a definite conflict of interest. Yet again, the financial system is a joke. Federal Judge Ronnie Abrams of the U.S. District Court for Southern District of New York formally withdrew from, how do you say that word? Adjudicating the case on Friday afternoon, just one day after Bankman-Fried was released from custody. So imagine Sam is released from custody, and then this person withdraws. It's a little bit sus. Federal judge withdraw from adjudicating the case on Friday afternoon, one day after Bankman-Fried was released from custody. To stay with his parents must be nice. He awaits trial on 8 criminal charges, including wire fraud, conspiracy to commit money laundering, and violations of federal campaign finance laws.
Yeah, he is not going to jail.
You don't think he's going to jail?
No.
Wow. Big claims. I'm not saying he is or isn't. I just have no opinion right now. Okay, so finally, actually, Zeshan, you're the one who put me onto this. Before we get into the Forex markets, do you want to quickly talk about this?
Yeah, so Meta, also known as aka Facebook, the parent company, settles a Cambridge Analytica scandal for like more than $700 million. Now, I believe the Cambridge scandal was when they was selling users' data and not making them aware or selling the data without their permission. And on top of the stock being down by more than, I don't even know, more than 70, 80%, this slapped with a fine of more than 700 million. Now, Ninja, one question, with these fines, do they have to pay immediately, or are they given a time frame to pay, or how does it work?
I do not know. That's not something I know.
Cool. So that is that, and I'll be talking to you about the interest rates and macro, a little bit about macro, and then over to the Forex charts. I'm going to just share my screen.
Yes, sir.
So,
guys, this is exciting because this is pretty much the second time in my life I've ever seen Zeshan do TA. So
for those of you that don't know, the Federal Reserve, they're like the mafia when it comes to money. They control America's dollar supply, and I'm going to go through with you the interest rates that have been taking effect from March 16, 2020, when they were at 0.25%. This was at pandemic levels just at the start, and then they've slowly been increasing and currently standing at 4.25 to 4.5%. Now, why have they been increasing interest rates? Now, I've got some data to share with you. So, March 2020, these are the monthly inflation figures. So, as you can see, it started off as 1.5%, then 0.3, 0.1, 0.6, 0.9, 1.3, 1.37, 1.8, 1.17, 1.36. Then in 2021, 1.4, 1.67. So as the monthly inflation figures are slowly increasing, what's happening? So is the interest rates. Now, moving on to 2022, 7.8%, 7.87, 8.54, 8.58, 9%, which was the highest in June. So where we gone? So back in June, the interest rates were between 1.5 and 1.7, but the inflation was 9%. So even though interest rates have increased a lot more, so like 6 months later, it's only really taken 2% off. Now, how does that affect the rest of the world when it comes to the Bank of England, Bank of Japan? You've got the Bank of England. Now, this is something I actually found quite interesting. Back in the 1970s and 80s, interest rates were like 12, 17%, 15%.
Damn.
Yeah. And people were coping. People had mortgages back then. Of course, asset prices were a lot lower back then. Much lower, because if governments did print money and expand their balance sheet, then they would have to pay quite a high price for it. And savers were encouraged to save money due to their saving accounts being a lot higher than what it's currently at right now. So back in 2020, interest rates were around the same sort of figure, 0.25%, and currently stand at 3.5%. Now I'm going to go through with you the same sort of inflation figures. So these are the monthly inflation figures. So back in April of 2020, inflation was at 0.9%. So very, like, barely, affecting your pocket. Now, inflation's at like 9.3%. Now there's an interesting thing to know when it comes to CPI and the way how governments actually calculate CPI. They do it using a basket of goods. So they'll use the price of tuna, they'll use the price of tobacco, they'll use the price of quite a variety of different goods. Now, if for example tuna increases too much, then they'll replace that with cod, which hasn't increased that much, and that reflects on these inflation figures that they've posted, where really and truly inflation is much higher than 9.3%. More so between 15 to 20%.
For real.
Just taking into consideration energy cost and fuel cost.
My shopping these days costing £60.
What is that, a month or?
My weekly shopping, bro.
Oh, your weekly?
Yeah, it's expensive, bro.
So imagine a family of 4, a family of 5. That's like nearly £600-700 a month
Something like that,
for
bro.
them.
I feel it, honestly.
Yeah. Now, interest rates will have to sort of keep on rising until CPI, until inflation sort of decreases. Now, I'm going to go through with you this as well. So think about this. Interest rates in America are like between 4.25 and 4.5%. And currently inflation's at like 7.1% for the month of November. December's not been reported yet. But then they have the audacity to sort of put through a 1.7 trillion spending bill through their government, which is going to send inflation even higher.
Wait, what are they spending that 1.7 trillion on?
So it's mainly government spending. So things to do with healthcare, military.
Yeah.
So now the reason they're having to get this is because they don't collect enough in taxes. Their income stream is sort of lacking in that area. Now, if they instead use the capital to invest into things that are income producing, they wouldn't have to sort of borrow money from their own selves and devalue their own currency, and then that in turn won't affect interest rates to sort of go higher, and inflation won't go higher. So what's included in this package? So nearly 700 billion in domestic priorities, 858 billion in defense funding. So right now, America's going under a tough time with the cold and the winter and electricity shortages. They're spending more money on the defense rather than their own country. So that tells you a little bit about their politicians. And part of that defense bill.
Wow, so 858 billion in defense, but only 772 billion in sorry, go back to that defense stat. The measure known as Omnibus Bill includes roughly 772 billion for domestic priorities and 858 billion in defense funding. Oh shit.
If you look at
a lot of enemies.
If you look at states such as LA and San Francisco, they've got a major homeless problem, and
yes, I know.
Within this package, they send in 45 billion in emergency aid to Ukraine and another 40 billion in disaster relief for communities recovering from hurricanes, wildfire. So they're giving more money to another country rather than their own people.
Why do you reckon that is, though? There's got to be a play behind this. There must be, like it's not because they want to just be nice.
I'm a bit of a conspiracy theorist, so I think
go on, drop the conspiracy, bro.
I think they're all sort of because they're all sort of intertwined and connected with the WEF, World Economic Forum. So the World Economic Forum, they have a young leaders program where all of the majority of the world's governments, the politicians are in this sort of organization. And believe it or not, Putin at one point was as well. So my theory is Putin invaded, even though he has his reasons due to security reasons, I believe he invaded Ukraine. So people throughout Europe and the West, their pockets hurt. They rely more on the government. They get more into debt, credit card debt. Their income decreases. And then that, I think it's generally for people to have a more so reliance on the government rather than them own selves as being independent from the so-called matrix. Because if you're independent and if you have a voice, then the government can't really, as they say, fuck with you, because they can't, you've got your own money. Whereas if you need to rely on the government, this is where CBDC is coming to place. You don't invest into assets, you increase your liabilities. You say something that's out of line, the government's gonna, sort of take your CBDC coins away, just like they did to Kanye and Tate. They cancelled them. So yeah, with this defense budget going to Ukraine for weapons and other sorts, this war is going to be prolonged, and there's no time anytime soon that this energy crisis and inflation is sort of going to soften the blow, meaning interest rates are going to have to increase. I'm afraid they're going to have to increase.
Damn,
now,
Zeshan brought the bad news.
So now I'm going to do a little bit of technical analysis.
Please.
So this is a US dollar currency index. So this chart is giving you the strength of the dollar. So if we look at around about,
you on that naked trading life, yeah? Black candles.
yeah, black candles. So what this chart shows us is, especially the US dollar index, is the higher this goes up, means the value of the US dollar increases, and every single currency around the world, such as the pound, the euro, decreases. So if the dollar does well, nobody else does well. So it's like 1%, 1 out of 100 people doing well, and 99 people not doing so well. Whereas if the dollar decreases in value, then the rest of the world, their currencies sort of increase. Now, from this chart, we can see
them, like the major currencies, isn't it?
Yeah, the major currencies.
Yeah.
So from this chart, we can see that the US dollar, it's made its first higher high, higher low, 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 higher high. It's failed to make another higher high. So now the trend has shifted from going bearish to now bullish. Sorry, from bullish to now going from going to bullish to now the US dollar index going bearish. So it's made its first lower low here. This is on the weekly. Let's have a look on the daily. So my predictions for the US dollar index is for the US, unless sort of the US dollar breaks this, then I don't expect them to continue going bullish. I expect them to continue to be bearish. Now, how does this affect the rest of the market? So these 7 pairs, the euro, US dollar, British pound, US dollar, Australia, US dollar CAD, US dollar Swiss franc, New Zealand US dollar, and US dollar JPY. These are the 1, 2, 3, 4, 5, 6, 7 most liquid markets out there. And all these markets have, their spreads are quite not as big as if you were looking at like a foreign currency pair, like Brazil's currency versus Latvia's currency, where the spreads are like enormous. So all it means, what the spread means is, let's just say, for example, so right now, euro US dollar, the price is 1.06139 and to 1.06180. So right now the spread is about 4.1 pips. Now, if you are looking on a current, like a foreign currency pair, so if we look at, let's look at something exotic.
Have a look at the Indonesian rupee if you're something exotic. Check out my currency.
Indo.
Yeah,
Let's
so
look at
like
this.
do IDR and then GBP or US, whichever one.
Okay, we'll do this one.
Yeah. Why not?
Look at the spread.
Wow.
Yeah, that is wild. Okay, enough of
God save the
that.
Indonesian rupee, man.
You got to be a real sniper to sort of be trading that.
No thanks.
So as we saw here, the US dollar, the value increased from around about January of 2021 all the way its all-time high in September 2022. Now, what did that have on the effect of the rest of the market? So as you can see, from around January of 2021 until around sort of the same period of September 2022, the euro has decreased in value because the US dollar has increased in value. Now we're sort of having so this is sort of a bearish pattern. So it's making lower lows, lower highs. It's broken that low. So that's a new low, lower low, lower high, lower low, lower high. It's making lower lows and lower highs. And it's sort of broken this previous lower high. So it's made its first higher high here. So now we've had a trend shift from bearish to now bullish. Same sort of thing on the British pound US dollar. So imagine £1 for every £1 so for every £1 you got $1.4 at its all-time low. It nearly broke the 1-to-1 threshold with the US dollar. This was when, what's her name, the former Prime Minister Liz Truss was in office, and her economic.
You know what? I forgot about her.
Yeah, so her policies of energy and.
I feel like we blinked and then she was in and out. That was so quick.
Yeah, she made it dip and left. It dipped and then she left. Yeah. So now trend has sort of shifted from going to bearish to now bullish. So I expect so as long as the US dollar decreases, so it goes down, I expect the US dollar to sort of increase. Same goes with the British pound US dollar. Let's look at AU. Now AU. This is looking a bit wild. Australia, US dollar. Then we've got US dollar CAD, US dollar Swiss franc. And then New Zealand, US dollar, and US dollar JPY. Is there anything else you want me to go over? Or do you have any questions? Jerome, Ninja?
Yeah. If you're not comfortable making predictions, don't make them. But where do you think the US dollar is getting to? Where do you reckon it's going? This is the one thing that's going to affect all assets and all currencies.
It's
Like just looking from TA, I think it's gonna
go
I think it's gonna
lower
drop. Yeah, go lower.
before it
Up, up, up.
rallies again.
Yeah. So
It's
I think
probably
it's
gonna
gonna hit that support. Yeah, around there.
yeah, probably here,
Yeah.
which is
Yeah.
a 100. So you can sort of expect Euro US dollar to sort of reach here, and British pound to sort of
Going back up,
around
boys.
there.
We're going back up
We're going back up. We got our
for
boosters
a
on.
bit. For a bit.
Yeah. And that for this week is this week's episode of Technically Speaking with Ninja, myself, and Ash Jerome. If you do have any questions, put them in the comments below and someone from the Blockchain Sensei team will get back to you. Please feel free to like, comment, and subscribe and turn the notifications bell on if you got value from this episode.
Yes. Everything what Zeshan said, like, comment, subscribe. Please remember we do 2 free weekly webinars, Mondays and Fridays. Mondays the game, 8 p.m. to 9:30, covering stocks, crypto market updates. Fridays, NFT Fridays, covering everything NFTs, metaverse, virtual reality, etc. Register your free tickets in the blockchain.sensei Instagram bio, which will take you to our link tree. All of this will be in the comment section. If anybody's interested in one-on-one mentorship, let us know. And we'll sort something out for you. Probably get Zeshan involved that as well. Now that he's a bit of a TA wizard, and yeah, believe it or not, Zeshan was actually one of my original students back in was it early 2021? It's nearly 2 years ago now. But
January 2020. January 2020.
No, January 2021, not 2020.
Oh yes, 2021. My bad.
Yeah. Because
Oh yeah, that's right. That's right. Yeah.
Yeah, 2021, just before the amazing 2021 bull run. So, yeah, we've also got a mergers and acquisitions section for non-crypto companies, SMEs, etc. Get in touch with Blockchain Sensei, and then Zeshan will get back to you. Make sure you hit us all up on our personal Instagrams as well. They'll be in our that'll be in the comment section. So you can get in touch with Zeshan, TikTok, Twitter, etc. And yeah, this has been exciting. First ever Technically Speaking. I promised you guys that I will sharpen my sword. I will be forced to, because I'm going to be doing this show once a month or so. And yeah, season greetings, happy holiday, and we'll check in with you guys soon.